How do you go from being worth over $2 billion
To Alan Stanford, an American billionaire.
throwing $1 million for fun
You accept $1 million as winners.
to being sentenced to 110 years in prison?
Stanford could get up to 230 years in prison.
This is Alan Stanford's story. Long before he became infamous for all the wrong reasons, Alan Stanford was just a kid growing up in Mexia, Texas. Small Bible Belt town of about 6,000 people. His dad, James, was the part-time mayor and ran an insurance agency. His mom, Sammy, managed the household. It was just a comfortable family in a quiet town. But Alan never fit that town. His parents divorced when he was just 9, and from that point on, he was never the same. He grew up fast. By the time he was a teenager, he already stood 6 feet 5 inches and weighed over 300 pounds, carrying a deep voice and a crushing handshake. He enrolled at Baylor University to study finance, and while he was there, he started telling people around him he was going to be the richest person in the world. At the time, nobody took him seriously, but Alan meant it. And at Baylor, he met the one person who actually believed him. His roommate, James Davis. Quiet guy, accountant, and loyal to a fault. Alan and Davis graduated together in 1974, and what nobody knew yet was that these two would spend the next 35 years building the biggest lie. It was the mid-1970s, and the fitness industry was blowing up across America. Alan spotted it early. His dad helped him buy a small gym on Lake Air Boulevard in Waco, and Alan renamed it Total Fitness. Males only. Brand new Nautilus weight machines that nobody else in Central Texas had yet. And the place took off almost immediately. Within a few years, he'd expanded into a chain of 7 ultra-luxurious gyms across Texas. Annual memberships ran up to $1,000, and already at 30, this guy was driving a white Jaguar through the streets of Waco and leasing a helicopter with Total Fitness painted on the side. One of his employees later said,
"He was a tyrant to work for, but he also had this charisma. He had this ability to pull people in."
Then the Texas oil business collapsed. And because Alan had just opened a massive new complex in Houston right in the middle of the downturn, there was nowhere to hide. Memberships dried up, debts piled up, and one morning, employees showed up to work, and the doors were locked. Sign on the door, closed. $13 million in personal debt. Meanwhile, the same oil crisis that killed Alan's gyms had also crushed Houston's real estate market. So Alan and his father started buying up properties for almost nothing, then quietly held on to them as Texas recovered. By the time his dad retired in 1993, the company had grown to 500 employees. But that success taught Alan something dangerous, that the fastest way to get rich is to look like you already are, and he was about to take that lesson offshore. In 1985, Alan moved to Montserrat, tiny British Caribbean island. Regulation was so incredibly lax that 350 banks were registered for a population of barely 11,000 people. Many of those banks existed only on paper. Some literally operated out of bars.
The only reason to open a bank on Montserrat was if you had fraud in mind. If you were legitimate, you went somewhere else.
Alan bought a storefront, named it Guardian International Bank, and hung a painting of his grandfather in the lobby. He told clients the bank had been around since the 1930s. His pitch went after wealthy Latin Americans, Venezuelans and Colombians who were worried about their own governments collapsing and wanted somewhere safe to park their money. Alan promised returns 2% higher than anything in the US, and when people asked how, his answer never changed.
There's no magic to investing. It's just hard work, it's a lot of diligence, and it's just staying the course.
By 1990, the bank already held $100 million. But then the FBI and Scotland Yard started cracking down on Montserrat's entire offshore banking sector over suspected drug money laundering, and Alan's license got revoked. So he did what he always did. He moved 20 miles south to an island that was every bit as corrupt as the one he just left. Antigua was plagued by poverty and had a long history of political corruption. The government needed investment badly, and Alan Stanford showed up with money and plans. They welcomed him with open arms. No questions about what happened next door. In 1991, Allen founded Stanford International Bank. James Davis became CFO, and the pitch was simple. Buy a certificate of deposit from Stanford's bank, and you'd earn returns that consistently beat every major bank in America. Allen told investors their money was going into safe, liquid assets, managed by a team of over 20 analysts, reviewed yearly by Antigua's financial regulator. But there was something investors never knew. Stanford's organization was way too flat for a multi-billion-dollar company. There were no layers of management. There was Allen at the top, James Davis cooking the books below him, and a young chief investment officer named Laura Pendergast Holt in a role that made no sense for someone her age or experience. And the Antiguan regulator Allen kept referencing? His name was Leroy King, and Allen was paying him to forward SEC inquiries directly to Stanford before he even responded. The watchdog was on the payroll. Meanwhile, Allen had already partnered with TD Bank in Canada, which gave him access to correspondent banking services. In plain terms, that meant he could move billions internationally without raising red flags. Investor money flowed straight from Houston and Miami into accounts Allen controlled, and the whole thing just kept growing. By the late 1990s, deposits hit $3 billion. By 2008, it was a staggering $8.5 billion from investors across 140 countries. Allen was on the Forbes 400 list at $2.2 billion. He'd spent a whopping $100 million on helicopters and private jets, paid over $100 million just to extend his yacht by 10 feet, bought Maiden Island, an entire island in Antigua. The government even knighted him. And then came the defining moment of his career. Allen Stanford landed a personal helicopter on the pitch at Lord's Cricket Ground in London, the most famous cricket venue on Earth. He brought a plexiglass box filled with $20 million in cash, prize money for a match he'd personally bankrolled. One game.
Winner take all. The loser goes home unhappy. The winner goes home very happy.
The crowd cheered, the cameras rolled, and every single dollar in that box belonged to someone who still thought their retirement was safe. But long before this, the SEC had actually known something was wrong, even since 1997. Their Fort Worth examiners investigated Stanford 4 separate times between 1997 and 2004, and each time concluded his CDs were likely part of a Ponzi scheme. Yet each time, enforcement decided the case was too complex. They wanted quick hits, and Stanford wasn't one, so the scheme just kept growing. Between 1997, when the SEC first flagged it, and 2009, when they finally acted, investments in Stanford's CDs grew from $250 million to $1.5 billion. Nobody stopped him. It took the 2008 financial crisis to finally bring it all down. Markets crashed. Investors panicked. They wanted their money back. And for the first time ever, new deposits weren't enough to cover the withdrawals. The bank claimed to hold $8.5 billion, but in reality, it had barely $20 million. On February 17, 2009, federal agents raided Stanford Financial Group's offices in Houston and Memphis. That same day, Allen tried to charter a private jet to Antigua, but the company wouldn't take his credit card. They only accepted wire transfers. A man who carried $20 million in a glass box couldn't pay for a plane ticket. He was found days later hiding at his girlfriend's house in Virginia. And James Davis, the roommate from Baylor, the man who followed Allen for 35 years, flipped immediately. He told prosecutors he'd been fabricating financial statements since 1988. His entire job for over 2 decades was just making up numbers. In March 2012, Allen Stanford was convicted on 13 of 14 counts. His lawyers argued he was a legitimate businessman caught in unfortunate circumstances. The jury deliberated 3 days, but they didn't buy it. Allen Stanford was sentenced to 110 years in federal prison, with a projected release date of 2103. For the 21,000 victims, the nightmare didn't end with a verdict. A victim said his husband had a heart attack because of losing money worth 50 years of hard work.
It's very hard when I receive all these letters. It's telling me my husband died. He had a heart attack. He couldn't handle losing everything after 50 years.
For years, roughly 18,000 investors recovered nothing at all. Some died waiting. Eventually, the legal fight started producing results. 5 banks that helped facilitate Stanford's scheme settled for a combined $1.2 billion in 2023. As of 2026, the court-appointed receiver has recovered more than $2.7 billion for victims, with a final distribution of $339 million now being issued to over 14,000 claimant groups. The SEC publicly admitted it had failed. Its Inspector General confirmed that examiners flagged Stanford as a likely fraud 4 times across 7 years, and 4 times the agency chose not to act. That failure led to reforms in how the agency handles fraud cases today. James Davis served for 5 years. He's been out since 2017. Leroy King, the regulator Allen had been paying off, was eventually extradited and sentenced to 10 years. Allen Stanford is 76 years old now, still at Coleman Penitentiary in Florida, still says he's innocent. He's even published a book through a fellow inmate about a man wrongly imprisoned.
I will die and go to hell if it's a Ponzi scheme. It's no Ponzi scheme.
The other allegation is that you were involved with the Mexican drug cartel.
Oh, bullshit. If you say it to my face again, I will punch you in the mouth.
You're going to punch me in the mouth?
No, I'm not going to punch you in the mouth, but I'm just saying that is absolutely an absolutely ludicrous thing to say.
Allen Stanford promised safety, stability, and returns that seemed too good to question. And for 20 years, almost nobody questioned them. If there's one thing this story proves, it's that the people who look the most successful are sometimes the ones you should trust the least.
The moral to this story is if you're full of BS, it'll get you to the top, but it will never, never, never keep you there. Thank you very much. Thank you.